what do you think about the role of private equity in society today?
Well, it's a contentious topic in a lot of ways. I think there are perspectives on private equity that have historically been come in as a new owner, take a bunch of cost out, run the business into the ground, and that is bad for the world. It's bad for people that are working at those firms, and unfortunately, I do think that does happen quite a lot, especially as investors are squeezed more to go find deals and they are paying higher prices, and so they need to get a little bit more of a return out of every single deal, and they're starting to kind of, I don't know if it's make poor decisions. Obviously, I don't see every single decision as it comes across, but the incentives are a little bit misaligned. So put simply, lots of sort of challenges with that universe and that dynamic. Now, I having seen this now at three different private equity firms, has also become, and learning a little bit about it in business school, what has also become very clear about the private equity industry is that there are a lot, like the incentives for positive change are entirely aligned. Every private equity fund wants the company to grow, and every employee benefits if the company grows in theory. Every It creates new jobs, so folks and people get opportunities for new jobs. In theory, the service that you are providing is expanding access to a lot more folks. So there are positives, and there are some alignment of incentives for the private equity funds that are doing it the right way. And I think there's a dynamic here of thinking of things from a short-term perspective and from a long-term perspective. A lot of private equity historically has been a 3 to 5 year period: buy, grow, sell, done. What people are starting to realize now, I think, is that the real benefit and real value is created if you're making long-term decisions for these businesses that are positive for profitability, for impact, for all of those things. And so my hope is, maybe a little bit of me being hopeful, is that a lot of private equity funds are shifting their perspectives to focus more on the long-term decision making, because they're finally seeing that is creating returns as well. So that's my high level perspective. Lots of morality questions that we can get into on that front, but I think that's where I'm landing. Now, where I take that layer and apply it to like what I'm excited about doing, and we can segue into this in a little bit, but I think there's a lot of opportunity for private equity in this sort of smaller, lower middle market private equity segment, where there's like mom and pops that are looking to make transitions, looking to cash out and make a good amount of money for a lot of work that they've done over decades of their life. And private equity has the capital to kind of come and do that. And hopefully, my hope again is that they do it in the right way, where they do right by the company that these people have built for 30, 40, 50 years, keep the employees there, grow it, and make that, have them leave a legacy that actually matters. So that's where I'm like really, really excited. And we can talk about that a little bit, but I think broadly, that's how I think about private equity.
Well, I love that vision. I think that's very inspiring, and I think that theoretically that's probably going to increase because people have seen getting bit in the butt a little bit by doing some of this like overly short-term thinking in terms of private equity. It's resulted in a lot of bankruptcies, a lot of like defaults, and a lot of the PE firms that were doing that strategy have frankly gone out of business. And so the people that are left in the industry, a lot of them are focusing on this longer-term private equity. I've seen that personally, and I think that that's a really cool trend. But I really do have to get to this next chapter here because I must know about what's happening next. And so after leaving Wharton, this incredible legacy of banking, consulting, PE, variety of different shops, how are you thinking about next steps here?
So to the point that I just made around small businesses being exciting, I spent a lot of time in business school excited about what's called search. And I don't know if folks will know search, but the simple version of search is, I'm very excited about going and buying a small business, $1 to $3 million in EBITDA ish, becoming the operator and the CEO and running that business, and then growing it and maybe selling it, maybe holding on to it for the rest of my career. In any case, one of those outcomes. And the reason that I've sort of landed on doing that is, I think, one, you realize as your career goes along that the most important thing isn't how much, well, at least for me, it depends on the person, but the most important thing for me is not about making the most amount of money. It's not about, living in life in a private jet and, doing all these fun things that you can definitely do if you want to go the private equity route. But it's about having control and governance over your time. It's about being there for the people when they want you to be there. It's about making sure that I'm building communities around me that, I care about and I'm investing in just as much as they're investing in me. And so part of that control over life comes with this mentality of where I want to spend the rest of my career. I've matched that sort of excitement about what I see my life to be with a little bit of what I see is happening in the macro landscape in the private equity world too. As I mentioned, I think there's been a lot of influx of capital into private equity that's created this stratification. A lot of folks are going into the lower and lower middle markets from the sort of middle market category of investing. And what that means is that the people that are buying, the people that grow these smaller businesses, companies, are actually paying higher and higher prices for smaller and smaller businesses. And so it makes it a very, very attractive time to go buy a small business because you can effectively sell that business if you grow it to a certain level of scale to a private equity fund that's willing to pay way, way, way more because they have this broader platform and this broader strategy. And so not only do I think it's like a really attractive and growing space to create some alpha, but I also think it fits the lifestyle that I'm hoping to look for in the future. Now, I'm happy to get into more details about all of that, but it just felt like it was a good marriage of the two things that I'm looking for.
I love that. Well, this is very impressive because here's someone who turned down what I'm going to say is probably $1 million plus offer in private equity to continue on as a VP and decide to go do something so much more entrepreneurial, which is a huge risk. $1 million is not something to scoff at. Like a lot of people would really, really love to make it to where you made it. And you just said, no, that is not what I'm looking for. And so what got you interested in something more entrepreneurial, and how did you know you were ready to take that risk and like leap off and turn down $1 million a year working in private equity?
Yeah, honestly, never really know, and you never really feel comfortable with taking the risk. And I think everyone tells you like if you wait for the right time or for the stars to align, you'll never go do it. And it goes back to a little bit of that conversation that we were having earlier around you build some skills, and then the big question is when do you figure out the right time to start applying those skills for something for yourself? And so at this moment, I sort of realized like, look, I've got this great job as a VP in finance, and learning a ton at this private equity fund. It's great, but I'm not getting closer to that goal that I see at the end of the tunnel, and wanted the opportunity to just sort of start doing it at this moment where in the next couple of years I'm still I don't have children, I don't have a specific house that I'm tied down to, I don't have a bunch of liabilities or constraints on what's happening in my life. And I also have an extra few years for things to potentially, even if they do go wrong, for the downside to not be all that bad. And so it just felt like a little bit of a great combo of like now it's a little bit of like now is the right time, and it's if I don't do it now, things are only going to get harder to do it later. And so I might as well take the chance and go see if I can go find a business. If it works, great. If it doesn't, well, it doesn't matter. But one of the things that I've really learned about myself is I want to work with people that I highly respect, that are fun to work with, and that I will absolutely run through a wall for. And those have often been a lot of people that are close friends that are also, I think, absolute rock stars and have similar sort of backgrounds. And so the other sort of impetus for pushing for this is one really close business school friend went and did this for himself. He bought 10 stores, these pliable acai bowl stores in the greater Philadelphia area. And ever since he did that deal, he's been getting a lot of deal flow. And he was saying, hey man, like if you're interested in it, come join us and let's go build out a couple more platforms like this. And you can go buy your own business and run it. We can build a holding company and grow it that way. And so that just feels like a very compelling path because not only am I working with a close friend who I think is extremely, extremely smart, but I'm also doing something that I can see gets me to a path in 10 to 15 years of full control over my life and doing things that I'm excited about, but also getting to be there for the people that I care about when I need it.
I love that. Yeah. Well, it's a beautiful trajectory. And I think a lot of people don't have the courage almost, honestly, to actually make that call. Because like you're saying, if you wait for the stars to align, it's never going to actually happen. And so many people delay pushing for something. And don't get me wrong. There's too early. There's times when it's too early and you're not prepared enough. You don't have the credibility. You don't have like the resources you need to succeed. But you'd invested in the resources. You learned the soft skills in consulting. You learned the hard skills in private equity. You learned the network and the people in business school. And then those things converged to this incredible opportunity that you're pursuing now. And so fast forward 20 years. like what kind of professional legacy are you hoping to build, and like what's the personal thing that's driving that?
Yeah, it's a big question, and I think like a really really good one, and something that I continue to try to get a better answer on as I go through it. But the best way to describe it is I want to be a talent multiplier and an effective compounder. Those are the like two sort of quippy phrases that I think of. Like one is I want to work with people and make them better around me, and I want to be known as someone that anytime someone came and worked with me, around me, or in the same ecosystem, they unlocked a new level of maximum potential, and they just did things that they never really thought they could do, just by nature of what I was doing to support them, me pushing them, whatever it might be. The other thing that I want to do, and this is a little bit more career oriented, but I want people who invest in me to always be asking to invest in me more. I want them to be pounding the door and being like, "Hey, I gave you $1 million. I want to give you two. I want to give you three. Go find something else to go do it at." That's those two. If I hear those two indicators, I think my legacy will be exactly where I want it to be. I want to be proud of who I've worked with, and I want to make sure that I've made their lives easier. And so I think those are the two things that I'm really trying to angle for every day, every time I make a decision, and hopefully get there. I think I imagine that will change. Maybe it'll change a little bit over time, and I'll kind of adapt and form. But today, that's kind of where I'm hoping to be.
I love that. Well, count me in on the next fund that you raise. I'm happy to invest, even though I am not a Wharton classmate, if you'll let me in the fund. But with that,
Absolutely.
we've got a few closing questions here, because so far we've had an incredible conversation, Ashish. I've really enjoyed talking. And we've talked about how you went from this chemical engineering background into consulting. You learned the soft skills. You learned how to communicate with executives. Then you made it over to PE. You struggled through it. You invested in that CapEx to build the skills that you would need to succeed in finance. And then that carried you on to Wharton, where you made this decision to spend $1 million of your lost earnings and your cash to like go and develop this network and learn this skill set and think very intentionally about where you wanted to go next. And where you're going next is something entrepreneurial. And so I'm so excited to see how this turns out, and how you end up acquiring and building businesses and things like that, and hope that I get to be a part of that upside in the future. But the last few questions I'm going to ask you just to close us out. These are rapid fire. Feel free to answer them in one sentence. What is the highest ROI habit, technique, or routine that you picked up on Wall Street that you still use today?
Do the hardest task first. It's always harder than it seems, and you want to know the gating items early instead of finding out at 3 a.m. that you can't do something.
Ain't that the truth? Now, second, if we looked at your calendar and your bank or credit card statement from the last 30 days, what would it say that you actually value?
This is interesting because the short answer is being there for my close friends and my partner when it matters. I think that's specifically these last 30 days, mainly because I spent a ridiculous amount of money going to 2 weddings in Guatemala and Costa Rica this month, and traveling across Costa Rica with my girlfriend. And so my bank account is very much hurting as a result of those two things. But I think it's a good reflection of what I care a lot about. And those are the memories that I think will always matter most to me, is to be there for my friends in their big moments.
Not a bad answer. Well, and so to close us out, I'm going to copy a question from How I Built This podcast. How much of your success is due to your hard work and your skill, and how much is due to luck?
Bain would love this answer. It's 80-20, 80% hard work, 20% luck. And let's hope that luck evens out a little bit this next year as I look for a business to buy, because I have a feeling that's going to be a bigger factor.
Great answer. Well, the Bainisms have returned to carry us home here. Ashish, this has been an incredible conversation. I think anyone who's coming from an engineering background, who's thinking about consulting versus banking, who wants to explore private equity, is questioning business school, or questioning entrepreneurship. You've lived so many lives already in your career. You're on an incredible trajectory, and I think all of us are excited to see where it goes next. So thank you so much for taking the time. It's been an absolute pleasure to have you on, Ashish.
Thanks so much, Max. This was a ton of fun.